Okay, so we ended up getting the downside that we were looking for yesterday. Unfortunately, it went down a little further than what we thought, thus invalidating a few setups. So let's go ahead and review, recollect, and see what the potentials are for the following sessions. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with a GTII technicals, raw price action, and statistical threat of analysis on this Thursday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, you guys, so just a quick little bit here in psychology. I want to express some thoughts here. Okay, so if you are a long holder of GTII and you are incredibly frustrated with the price action, you know, no one's going to be happy when your portfolio is going to the downside, right? Of course, we don't want that. We want to make the money. We don't want to lose the money, right? So now, speaking of psychology, if you are a long holder of this and you know, kind of talk crap about your asset that you're holding publicly, what do you think that would do for the next retail investor that has a few bucks in his pocket that he can invest in? Do you think that he would be persuaded into talking about into investing into something that you and everyone else is talking crap about? You kind of see where I'm going with this. You know what I mean? If you are a long holder of this, I'm not going to actually tell you anything what to do, right? But maybe consider the psychology for the future investors, right? So as you would be contributing into staying away rather than getting some more people that are also bulls along your side, right? So yeah, just a quick little thought here for you, okay? So but no problem. You know, you will do as you will, right? But it's no problem, you guys. So let's go ahead and start making our notes now, because this remember a couple days ago I mentioned to you that I don't usually like to follow this inverse head and shoulders, a herpy-derpy, because it has a kind of a crappy hit rate, right? It doesn't play out as much all the time. It doesn't have mathematical application. It only has a psychological component. Okay, so let's go ahead and take the invalidation out of here now, or embrace the invalidation, better said, and start to look at what the formation looks like now, okay? Because it could be something pretty interesting, and we're already getting some very nice touches in now that we have our new price action set, right? So what we're looking at here, let me just go ahead and make sure that I can draw this as best as I can, right? So it's just for everybody to kind of consider, right? So I could actually be just like this. Hang on just a sec, okay? Because I'm giving you a very, very discretionary little setup here. I decided to maybe want to do this, you know, in person with you instead of having it prepared prior to the prior to this you know, video being made, right? So yeah, there is a potential here of something being formed. Okay, two actually very interesting positions. One of which would be a right angle triangle, which would not be in our favor, right? That wouldn't be good. So if we did this, then there could be a continuation to the downside here, and so that target may actually be around 144 to 133. Okay, but there is also a very obvious connection here, like this, right? So something along the lines of just like this. We have the contact point here, contact point here, contact point obviously here, here, and the first one, right? So what you're looking at is a falling wedge. Okay, so another one of those formations that just have you know, the potentials of only a psychological component, right? So if I were to kind of make this into, actually, you know what, it may very well be like this too. Both of which are still falling wedges, right? It's just we have to try to make sure that the formation is not being forced by any means, right? So it could be this, what we're facing here. Okay, so if it is that we are building this, then this would be a continuation formation with an upside target as well. And if you remember correctly, and also my master students that are present, usually these formations tend to realize when they're at about 60 to 65% of the wedge, okay? So to the apex of the triangle, that is, right? So it would be, if we were to apply a supposed area of breakout, then that could be maybe around here, right? Maybe Wednesday or Thursday next week, somewhere around there, right? So then the upside target to this would lead to somewhere around $1.89. Sorry, $1.90, right? So we would be able, remember that this is just a very discretionary way of looking at things, right? So, and something that kind of worries me just a little bit too is that we do have increasing volatility here with a moving average pitch to the upside and a volatility component pivoted towards the upside too, alongside stochastic momentum with a downside pivot. Okay, so that's usually indicative of either a further validation for a downside or consolidation, right? So what we want to focus on is also with the RSI. Okay, so the RSI on the 6-hour period does have an upside pivot, and we do have that 14-day simple moving average above us. Okay, so that could mean that we could make an upside move here, right? On the next 6-hour iteration, which would be the starting of the next session, starting tomorrow, right? So we can actually make a move to 2 areas of resistance. First of all, 159 would be resistance, followed by the trend line from the triangle itself, which could be located at about $1.65. Okay, so 159 to 165 is a critical area of resistance before coming back down and continuing in this area here. Okay, so if a couple of the longs, or a couple of the bulls, or a few of the bulls, got a little spooked today, so some stop losses were definitely triggered. We definitely got a downside continuation here, and yeah. Now, regarding volatility versus momentum, guys, please remember that these are the footprints of price action. So if you're able to identify naked shorts or a synthetic shares, because I'm sure that from the drop here, which let's see, from about $2.50 all the way down to $1. In 18 cents, everybody was screaming naked shorts and synthetics. So for some reason, you're screaming it because you're seeing it in the chart, correct? So if you're looking at it in the chart, that means that it's being represented in the chart. So when you're starting to make moves like this, then the footprints, like I'm explaining to you, the volatility and momentum would likely show it, right? So please notice here that we started this downside right at about here when we were at low volatility, right? So as the volatility starts to increase, thus making more shares traded, right? Increasing the amount of volume, meaning more shares. So if you're talking about synthetic shares, then you're talking about an increase of those shares being traded, right? I hope you're following here, because this is really as easy as it really is. 1 + 1 = 2. It really is that easy, okay? So I want to try to explain to it as though I was explaining to it to a 5-year-old, right? So please notice that we have very low volatility here, right? And it's indicative because we were just trading sideways here, right? So the moment that we start getting that first read, volatility starts increasing and increasing and increasing. See? So that's how we get to know that there was a serious volatile event from which we can measure every time it has happened. So that's how I'm able to put the edge that I have, right, you guys? So you're welcome. First of all, this is what I teach my master students, right? So volatility versus momentum is inescapable. It doesn't matter how manipulated the markets are. It is inescapable, okay? And now, why is it an inescapable? Well, think of it like, I've explained this a couple times too. Think of it like if you were in a muddy road, okay? So when you step, right? Not a road, right? Just a muddy field, right? So when you take a step, that footprint gets left behind no matter what you do, right? So no matter what you do, you will leave that footprint behind because it's a muddy floor. Well, volatility and momentum is that mud. And unfortunately, when price action goes to the upside or downside, regardless of it being manipulated or not manipulated, These muddy tracks will show no matter what you do. So that's how I'm able to identify some of the potential moves, whether it be downside or upside. Okay, so now in order to kind of keep morale at a steady place, because I am an influencer, I would sometimes just say, here's the opportunity to get long, rather than saying, we're going to hell. It's going to go to the floor, you guys, because that's not a good thing to tell people. It's not a good thing to tell anyone that's long the company, that believes in the company. Where everyone has the right to believe what they will. Okay, you guys, everyone has the right to practice as they will as well. There's nothing wrong with looking at a company and making your own decision that this company is a fair company and the future looks to be bright. It's your opinion that it looks good. It's also your opinion that it looks bad. But to bash people, and I'm not talking about me, right? I see people bashing each other in comments and stuff. To bash each other, that's not okay, you guys. And especially if you're a long holder of this, consider the psychology for the next investor that comes and reads the comments, right? Just don't put your asset into it's like you trying to sell your house and then you say, oh, this house sucks because the toilet broke and the pipe is leaking all over the roof now, and yeah, but I want to sell it for this amount of money anyway, so it's your choice if you want to buy it. I mean, how do you think it's going to make the buyer feel? Right? He's probably going to run away. So, consider the psychology behind your asset, right? You guys respect what you're doing here. It doesn't matter the emotion. It matters the data. It matters what you believe, okay? You guys keep that positive morale no matter the upside or downside. All right, you guys, so let's go ahead and continue on the analysis here and see what else we have in store for GTII, okay, you guys? So on the 8-hour chart, the Gaussian channel is looking a bit dangerous, okay? So the fact is that we are kind of coming down from that Gaussian channel support bottom, and even on the 12-hour, right? So this is... it could be very, very bearish in a situation like this, right? So I like the fact that the 8-hour is combating it. It's trying to find that support to reclaim the inside of it, okay? And what the matter of the fact is that the 12-hour is starting to print a red bar, meaning that this conversion of red, which is this here, could start a possible downtrend. But please remember that we are speaking of a downside here to find a relevant support soon enough. Okay, so yesterday we were speaking of the potential of closing a 5-day iteration upside of the channel, this descending channel that we've been riding on for some time, right? So that 5-day closed today. We're going to see the implications of what happened, right? This is already not good. Okay, so we're going to see what happened. At the opening of tomorrow's session, we'll be able to see how the momentum and how volatility reacted to this closure here, okay? So the good thing is that we did close another candle upside of the channel here, which is okay, but we're still at an inflection point, okay? 150 would be the inflection point before retracing to the chop box bottom that we were talking about, right? $1.30 to about 122 or 121, whatever that was, right? So please remember that from here, I was explaining to you guys that the potential to come back down to 121, go all the way to the top side and try to see if we have a potential for an upside continuation here. We would look at it. But I also did explain that a catalyst would absolutely help us break out of this chop zone, right? So you're looking at weekly candles here, guys. So this is 1 week, 2 week, 3 week, 4 week. It's going to take some time, right? So you must be patient when you are an investor, okay? So if you are an investor to this company, that means that you shouldn't be worried about the price action that's happening today or even in 3 months. Okay, because you would be a 1-year holder, right? A minimum investor. Okay, if you're looking into the fundamentals of the company, if you're looking at the balance sheets, if you're looking at all that, the price action right now should not matter to you. The price action in a year from now should matter to you. Okay, you guys, if you are a short-term trader like I am, then this price action matters to you right now. Okay, you guys, because you can see an upside. So if you bought long, right, down here at about 50 cents and you got that up run to about $9, and but you're a long-term believer of GTII. I'm sorry. Let's go ahead and remove this. Let's remove that you bought here at 50 cents, right? Let's just say that you saw the price action go up to $9. But let's just put it this way, because I know one of my buddies in Twitter. His name is Dozer, right? I think he has an average that's way down there, way down here. I'm not. I can't actually speak for him, but I have remember he's the one that brought me into GTII months and months ago before I had a YouTube account, and he's been very diligent about his TA, right? So he mentioned to me, well, GTII could have an explosive move, right? So I'm not really sure if he bought it down here or if he bought it right up here before the run to $9, right? But he's been in it for a long time. So let's just say for giggles here that you bought at 3 cents. Right? And you bought it in September of 2020. So your price action went up and then you're looking at an increase. Please notice this, okay? So you bought at 3 cents, right? You got an increase here of 846% before noticing that you went all the way back down beyond your loss. So you went minus almost 100% to the downside. It literally gave away everything that it gained. But in doing that, we found that support, and the price action led to an increase of 21,000% to the upside. So just to show what GTII is capable of, right? So he's still holding 3 cents, and the price action comes down, and he's like, oh man, I'm afraid. And from this area here, it makes an upside, nice upside, and then comes down even more, making a new lower low, right? So he's scared again. But from this upside, he sees $9 from his 3 cent investment, right? So now what he's looking at is not the lower lows. Now what he's looking at is the higher highs that are being presented in a macro scale. Look at this. You have a higher high here, right? Higher high here. You have a higher high here. What's an investor to look for? Well, the next higher high, right? Whether it takes 1 year or 2 or 3 years. If you're an investor, you're a true believer for your company because you study it, because you made a conscious decision to put in the amount of money that you personally, not anyone holding your gun to your head, that you personally decided to invest in this. Okay, so that guy at 3 cents is not releasing at $9. And he also didn't release at 46 cents. So just to put it to you this way, he's looking at that 46 cents, of which recovered all the way to almost $3, and then now consolidating within the area that we're in right now. That investor is not looking to kind of go away here. He's looking for the next higher high. And I don't understand how anybody could actually say GTII is trash, right? Because this thing is, just to put it out to you real quick, the current price action, let's see where we are. 152, right? So let's go ahead and just take it down from the lows of what is this here? 2015, right? So 2015 to the 152 area that we're in right now. Where are we? Well, we're 72,000% up. I'm not sure how far in the gutter that means to anyone, but if being up 72,000% means trash to you, then I don't know that you belong in the stock market or as an investor at all, right? So, or you're playing it the wrong way, and you may need to study a little more, right, you guys? So just know that there are several ways to looking at this, right? But consider your psychology, consider your attitude, because the attitude has nothing to do with the markets, you guys. The markets don't give one hell about you. Neither does the company, right? A company can fight against the shorts with you, but they don't care about you personally. Okay, you guys. So in my case, I don't care about GTII. This thing, I don't care about it. I care about the retail. I care about people asking me for it, and I'll just express my thoughts, right, you guys? So consider the psychology here. Consider what can be looked at and what can be controlled and what can't be controlled, you guys. Because nothing in the stock market can be controlled by us, retail. But we can certainly take note of the footprints that they leave behind for future iteration, right, you guys? So let's just take a look at real quick what the potentials are for the coming session, okay? So we have an upside target here. We have an upside continuation from that 30-minute immediate short-term time frame, but it looks to be, to tell you the truth, a 30-minute to a 4-hour may not influence that too well, right? So the bi-hourly looks a little better, right? We're in the gravitational zone of the bear strength percentile, okay? This is very likely to continue to the upside, but find a resistance from that 14-day simple, eventually continuing on to the downside via the 4-hour suggestion, right? So if the bi-hourly and 1 hour and 30 minute have enough juice within them, then those time frames would essentially topple over into the larger term time frames and starting a cascading effect, right, you guys? But I mean, somebody got spooked, a large order went through, or whatever manipulation happened. It happens, guys. It's no problem. Okay, so we still have some downside to look out here, right? To look out for here, right? So please remember the targets that we are talking about. Okay, so if the downside gets more significant, you already know where we can go, right, you guys? But as of now, we still have a support range. We still have a very relevant support range at that 141.382. We also have a very the most important support range, which is between 121 and 130, which is landing right in the same chop box that I mentioned that we would be in until the catalyst comes through, and it's fulfilling as such. Okay, you guys, we're getting little signals here and there. But the sentiment is not ready. The overall psychology, the overall a long bias here is not ready for that upside just yet, and it shows it. All right, you guys, but please remember, first and foremost, I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever. Okay, you guys, I need you to do your own due diligence, and everything will be cool. All right, you guys, but with that said, I wish you well. A very good night. And I will catch you at the bell mañana. Adios.